Welcome back to another Monday Market Update with Kristen Mason Coreas. I forgot what I was doing for a second. I wasn't here last Monday. Last Monday at this time, I was watching my amazing daughter and her teammates in a championship hockey playoff game, and they came away champions. So if you didn't see our behind the scenes article that we send out in our weekly email, every Friday, there was a little article in there about that. Super proud of my daughter and her teammates who went to Denver, and a bunch of Northern Virginia girl hockey players beat all the teams that went undefeated in Denver to come away champions. So that's where I was last Monday. Here I am with you today, January 27th, the last Monday of January, to talk about what's happening in real estate. So next week will be February. Things don't stop, people. And I heard one of my colleagues say, it's spring, right? It doesn't feel like spring with all the snow on the ground. But Homes by Mason we do have 2 listings under our belt already, with more to come. We are actually listing something. We have the next 3 weeks. We have listings coming on every week for the next 3 weeks, and then maybe even the 4th after that. So it does feel a little bit like spring in terms of our listing inventory. And so let's rock and roll. Interest rates are what we usually talk about first, and they did go above 7% last week. We don't like that. Didn't expect that. But the good news is that we came back below 7%. We'd like to stay below 7%. So where we are here is just at 6.96, and the 4-week average is exactly, come on, there should be an arrow. There it is. Exactly 6.96. So where we are today is exactly where our 4-week average is. So that's, where we're living. The expectation overall has been that we'll be coming down this year, but we have a new administration. So I think there's a lot of wait and see what's going to happen with this new administration. So the 52-week average for interest rates is, I've got another arrow that should be popping. There we go, 6.75%. So close to 7 is where we've been. We've been as low as 6.08 in the past year, and hopefully we'll come down a little bit so that buyers have a little more comfort and a little more affordability as they're out there purchasing. In economic news, purchase applications surprisingly actually rose 1% last week, and were 7% higher than the year before, despite mortgage rates being over 7%. So that's pretty interesting. I think it does say that buyers are going to buy no matter what. We have, and this is national information, so buyers are going to buy. People have needs for homes. So there will be more buyers for sure at lower interest rates, but there are still buyers out there regardless. There are still reasons why people need new homes. Federal agencies, this is related to the new administration, must report monthly on progress toward lowering the cost of housing and expanding supply per a new executive order. So the Trump administration has stated they do want to increase housing affordability. I'm not quite sure exactly what the plans are to do that, but they're saying that they're going to be tracking that. So hopefully we'll see an increase in housing affordability. I know one of the things that they are saying, they are requiring and mandating the Fed to reduce the interest rate. Not quite sure that's going to happen. The Fed is meeting this week, so by the end of the week, we'll hear what the Fed does with their interest rate. The expectation is it will remain unchanged. So next week, I'll let you know what did happen there. For the region, the Mid-Atlantic region, which includes Virginia, D.C., Maryland, Pennsylvania, West Virginia, Delaware, and New Jersey, new listings have increased and are higher than both 2023 and 2024. So that helps us to have a healthier market. Shortage of inventory has been a problem for a really long time. So we like to have an increase in inventory. Contract times are slower than last year. So from when they go on the market to go under contract, buyers have a little more breathing room. What we have right now is the slowest pace for mid-January in 5 years. So that's pretty interesting. And new contracts are less than what they were last year by 4%, and have tracked below 2024 since the beginning of the year, likely related to higher interest rates. Let's see, let me go back for a second. So where were we last year? So last year at this time, we're higher by 2.7%. We're a quarter percentage higher than we were last year at this time, which makes sense that there's less buyers with higher interest rates. So this is the larger DC metro area as of January 19th, and most things are up week over week aside from time to contract. So that tracks. So more showings, more contracts, although that is different than what we saw here, right? Back here, we saw there was less contracts compared to last year. And actually, year over year, there are less contracts here. But week over week, there are more. So, and that's a big number, week over week. So more buyers come out usually each week as we approach the spring. So shorter by 3 days, time to contract, more listings by 13%. The price is up week over week and year over year by almost 2%. And active listings are up a touch, 2% week over week, up a jump from last year, 21.5%. So year over year showings were down, as we talked about, probably related to the higher interest rate. Purchase contracts down year over year. Time to contract up by 8 days. So lower interest rates usually means more buyer activity, usually means things are moving faster. So if those interest rates come down, that's how the market may turn, which is why I watch this so closely week after week, because I want to stay ahead of the curve and not be behind the curve. New listings are up year over year by 20%, and we talked about price and active listings. So what is happening in our hyper-local market, looking specifically at Arlington, Alexandria, Falls Church, and Fairfax, where we do most of our business at Homes by Mason. So this is data up until yesterday. So from January 20th until yesterday, there are fewer new listings, actually, week over week, down by almost 4%, but more contracts, up by 13.6%. And so the demand to supply ratio is at 93%. That means almost all of the listings that came on the market went under contract, not leaving behind much inventory. Oops, I went in the wrong direction. So let's see, there we go. So I had 3 arrows to look at here. Under contracts, again, up week over week by 13.6%. We will expect to continue to see contracts go up and buyer activity go up week over week as we approach the peak of our market, usually in May or June. The year-over-year supply, as we've been seeing, year-over-year inventory is up, so that tracks with what we've been seeing and helps to stabilize the market a little bit. So that is the Monday market update for today, January 27th. Thank you for watching, and anytime you want to talk with me directly about what's happening in the market and how that might affect you and your decisions, feel free to reach out. You can schedule an appointment with me. Should be a link down below, or reach out by phone or text at 571-210-1866 or by email at Kristen, Kristen, at homesbymason.com. Thanks for watching. Have a great week, and I will be back here next week.